All right, today I'm going to be talking a little bit about my personal investments and specifically um, some of the worst investments I've made. Two of the worst investments I've made in my short-lived investing um, time frame, and these are some investments that I kind of made without thinking much and really just early on in my investing time frame, and I wouldn't make them again, because I learned some valuable lessons, which I'll explain to you guys. um, but the first investment I made and that I want to talk about is Boeing, and I made this investment um, last back in 2024. So this was in January, and basically, when I just started my investment account, I added originally day one, I added some known stocks, and I was just thinking about stocks, companies that I know of that are popular, and Google, Amazon, Apple, all came to my head. I invested whatever one share in those, and then I was thinking, I said, what other companies do I know? And I came up with Boeing, and Boeing is they make most of the planes that are flown, and it's the manufacturer. They also do aerospace and defense, whatever. So I was thinking it was a good idea. So I looked a little on the chart and I saw a couple things. So obviously I knew it was Boeing. It was a known brand, which is good. You want a known brand, and I saw that they had originally been at 260, whatever, and they had even been at 300, I think, in the past. So then when I looked at it, it was at around 229, I think. So I thought, wow, this is a great opportunity for me to buy this dip. It'll go back up to 300. It could go higher because it's the new year. Good things will happen. So I invested one share, and that was a great mistake. And this one isn't as bad as the other investment that I'm going to show you, just because it is a known brand. It does Their financials aren't awful. They still get a lot of business. They're government backed, whatever. So that wasn't the reason that it necessarily was a bad investment. I think there's really only one big reason, which is a big lesson that I learned from this, is that there's certain stocks that I think are better just not buying. And one of those, especially relating to airplanes, whatever, is the manufacturer, and especially of transportation and stuff, and the manufacturer of things that um, bad things can happen really quickly. And Boeing is one of those companies where they manufacture the airplanes, and they can be having a great year financially. They can have their stock climbing. You see it like this, and they go from 170 to 260, but one crash and the stock crashes, and you see this. The stock it was, I think, the door fell off of one of their planes, and the stock went from 260 all the way down to at 1.130. That's ridiculous, and they didn't even have that awful of a financial year. Well, they did have a pretty bad financial year, but again, that's after the door fell off, because then they had to recall the planes, and they lost a little bit of business, and all this stuff happens because of these catastrophic events. And I would personally really avoid those types of stocks where these catastrophic events can happen on any given day that would completely ruin the company's progress and whatever. And that's really what Boeing is that it's a strong company and a strong idea, but these catastrophic events continue to ruin their stock progress, and investors are feeling the wrath of that. So an alternative, and what I probably should have done, is if I wanted to invest in airplanes, I should have invested in the airlines. I know American has been doing great, United Airlines, Delta, whatever. The airlines are such a better alternative because if something bad happens to the planes, if a crash happens, the airlines will not be really hit for it, because in terms of the stock, because it's not their fault. The airlines can't do anything about any problems with the airplane. It's Boeing's fault. So Boeing's going to feel the wrath of that, and their stock's going to drop. But the airlines aren't really going to drop. So it's a way better alternative, and you're really just investing. You're still investing in the airplane industry. And so, that's something I should have thought of when I invested in Boeing. And now it's a huge lesson I learned, because there's not really that many applications to this, I would say. But, there are a couple where just, you don't want to invest in something that, where the progress could completely be ruined in, a couple days or a span of a few days. Obviously, aside from, earnings, if earnings are poor, but just in terms of any sort of event. So that was a big lesson I learned from Boeing. I don't think it's as like there aren't many stocks that applies to, but it's just interesting to think about where you got to think about how stock progress is where it's mostly based out of, and Boeing's progress is based a large part in its ability to avoid these catastrophic events. That's really Boeing's job. If it has these long spans like this where there are no catastrophic events, the stock will rise, and because it is a good company. But if it has this period of doors coming off, having court cases because of that, losing business, it drops like crazy, and that's just not something you want to get into. It's way too volatile. So something to keep in mind, and definitely a good learning experience. And also another one, the second stock that I want to talk about is Plug Power, and this is a stock that that I was investing in around a similar time frame, and that I was even more passionate about. I really thought I had something here with this one. And if you look at, I'm going to go back to when I bought it. So this is around when I bought it. And I remember that, I originally had my couple stocks that I bought, and it was, whatever, Boeing, Apple, Amazon, whatever. And a couple weeks went by, and I said, I'm making all right returns. I didn't really put that much money in, whatever. And I said, I don't really have that much money, but I really want to make a lot of money. I want to make $1,000, whatever. So I decided to look to smaller stocks because I realized that, bigger stocks, while they're more safe, they really don't they're not going to double. That's just not how that works. So I looked at Yahoo Finance, biggest losers, and this was around this time, and I saw Plug Power at the top of the list. It lost like 50%. So I said, this is interesting. Why is it losing 50%? This might be a good buying opportunity, but I couldn't buy it. I couldn't buy it at $2, whatever, because I have restrictions, youth accounts, whatever, they have restrictions. So I waited a little bit, and I said, if this is going to go up to $5, I'm going to buy. And it went up to $5. I was in school, and I made the mistake of just clicking buy at $5, and that was the highest I'm pretty sure it got that day, and really ever since, it hadn't really grown past $5. Because the thing is with this stock, and there's a couple of reasons why I never grew past $5, is that its financials sucked. They really did. They were awful. They burned so much cash. They really don't make any money. They're in the energy game, and they really don't have any innovate. They have a couple innovative ideas, but they might be a long ways away, and don't think they really have the cash to sustain that. So they could even go bankrupt. And this was true here, and it's true now when it's at $1.86. But I think there was a little bit of news, I think, from when it went to $2.50. They got a loan from the Department of Energy, whatever. So the stock like exploded, and reasons for that are just because investors they want any reason to at least make some money, and they want reasons to buy because they don't, whatever. So it was really all hype. That's what this jump was. And me, not thinking much, I really just impulse bought the hype, and I thought maybe it'll go up like crazy. And I remember looking at the charts, and I went back to 2021, and I said, oh wow, in 2021 this stock went from $5 like it was now all the way up to almost $80, 75. So I was thinking, maybe it'll go up the same now. And in reality, that's not a smart way to think, and that's a good lesson I learned. Because again, in 2020, the financials were different. The outcome of the stock was different. It was 4 years earlier, but now, they were a declining company. They had a little bit of investors' hype, and again, this is a very, very cheap stock. Its market cap was dwindling. So I think that was something that I really learned a lot from. This is one of my biggest learning investments in terms of, you shouldn't just buy something because it's low and it's cheap and because it has the potential to maybe in the past it went up to 75. It doesn't mean it's going to do it again. And, I should have definitely looked at the financials before I bought this for sure. I should have realized that financials do not showcase a $75 price point, and it is really the financials really are shown up around $5 or even less. So that was a big mistake I made. And but I only lost, whatever, $100 on this investment. But ever since, I really haven't touched anything like Plug Power. I know there are a lot of stocks like this where there are struggling companies with struggling financials who are really, really cheap, and a lot of investors are intrigued to buy just because they're cheap. That is not smart, because while some people will make money off buying these cheap, struggling companies, a lot of people won't, because they're still struggling, and you saw this. Many people thought the $5 was the low, and it's at $1.86, and it's so volatile that it's up 10%, 10 cents a day, and you're up 10%, whatever. But in the end, it's not worth your time. And ever since I've lost money on this investment, I really only been investing in the big names, and I made videos on Nike, and then Gorilla, which that's the occasional small name, but again, that's a completely different story. They have growing financials. They're a new company. It's in a popular field in AI. This isn't this Plug Power thing that's been around forever and does energy and has maybe could go up a little bit, but also is struggling so much that they won't. So I think that's a great lesson that I learned, and I know I will never be buying something like this again, where the stock just dropped. But you need to look into the financials. You need to do all your research, and then you make the decision. And most of the times I would stay away from stocks like this. So again, very important lessons that I learned. And I think it really helped me become a better investor. And the fact that I only was able to make these mistakes early on rather than when I'm investing, large sums of money is great, because now I'm focusing more on making very quality investments rather than these, thoughtless investments. And making quality investments with larger sums of money is important, because you don't want to lose large sums of money. So very important lessons I learned. So hope you liked the video. Thank you.